terms of today's agenda, so what we're going to do is we're going to run you through the Frontier View Guide to identifying emerging opportunities in Sub-Saharan Africa. And this will take several forms. We will sort of explain why it's very important at the moment for multinational companies to focus on emerging opportunities, especially outside of the really big markets of Nigeria and South Africa. As we all know, Sub-Saharan Africa has some very fast-growing markets, but also some markets that are really struggling at the moment. So the whole question is, how do companies balance the need to continue to perform well in markets like South Africa and Nigeria, while also focusing on the new emerging opportunities in smaller and medium-sized markets? We will also spend a bit of time looking at industry opportunities as well. So we're going to drill down a little bit more deeply on public sector opportunities and examine where we see B2G opportunities emerging and being the most resilient over the next couple of years. We'll then look at private sector opportunities and sort of provide a bit of a rundown of different industries and B2B activity that we think will be the strongest. It really does vary from market to market, so we will share our views on that. And then we will also provide a view on the consumer landscape in Sub-Saharan Africa's fastest growing economies. We have seen a substantial improvement in consumer sentiment in many markets, and we are expecting to see consumer spending improve relatively significantly in many smaller and medium-sized economies in Sub-Saharan Africa over the next year or so. We always like to provide some actionable insights to our multinational clients. So we will provide some recommendations at the end, and then we will provide at least 10 minutes for Q&A at the end. However, if there is anything that really interests you in the moment, please do drop in. You can submit a question in the Q&A. We will be monitoring the Q&A field, and you are welcome to submit questions at any time, and we will be addressing them from time to time in the webinar. Fantastic. Okay, so I'm going to kick off with the approach that we recommend our clients take to identifying opportunities in Sub-Saharan Africa. So the first question is, why is this so important, and what should companies do about this? So the big story in Sub-Saharan Africa is that, or the approach that many of our clients take in Sub-Saharan Africa, is that they face quite significant pressure to improve performance in the region. And this is because you've either got corporate pressure at a global level, or there's pressure within the EMEA or MEA portfolio to improve performance in Sub-Saharan Africa. And this is not surprising because Sub-Saharan Africa has some of the fastest growing economies globally. We also have some of the weakest economies. South Africa's a very good example, but we have some sort of record-beating economies. Senegal and Mozambique are a few good examples where growth has been very resilient for a long time. And this is turning heads and making it much more important for companies to ensure that they're capitalizing on the opportunity there. But the challenge that companies face is that many companies are very heavily invested in South Africa and Nigeria, and they've been so for a very long time. And this is no surprise because South Africa is Sub-Saharan Africa's most sophisticated, wealthiest economy, an unrivaled amount of consumer and business purchasing power, a very large public sector as well. And there's absolutely no question of any of our multinational clients pulling out of either of these markets because they're so heavily invested in these markets. And there's no way of building a big Sub-Saharan Africa business without growing in these two markets or remaining presence there. However, the difficulty companies face is at the moment, these two economies are really struggling. South Africa faces significant structural economic problems, very high unemployment, load shedding, power shortages, strained public finances, relatively muted investor sentiment in the market, and also anxiety around the election this year. And in Nigeria, we're seeing a pretty significant currency crisis, very high inflation, underwhelming growth because the country is struggling to capitalize on its oil revenues to drive growth. And the issue is that in this environment, performance becomes much stickier, much weaker in the big markets, but very few companies are able to offset this very easily with a strong performance in other Sub-Saharan African markets, in what we call the tier 2 markets, the smaller countries in the region. And so this means that there's going to be tension that companies face in terms of having to balance resources between protecting their market share, doubling down on their positions in Nigeria and South Africa, but also ensuring that they allocate enough resources and re-examine their exposure to the new emerging opportunities in the region. So it's not easy, but there is a way to do it. So we do provide some guidance in terms of how companies should go about or consider capturing emerging opportunities. And we have a number of resources that we can help you with. So the first step in our view is to ensure that you undertake a process of market prioritization. And this includes assessing new opportunities. And this will allow you to identify where you can allocate your resources best in the region. We can provide analyst briefings, tailored analyst briefings for companies to help them evaluate this. We also have a proprietary market prioritization tool where you can provide inputs and data for us. And we analyze that, and then we provide some recommendations in terms of which markets are most attractive for you. There's also the next step, which we advise our clients take once they've identified the markets they want to prioritize, and that is reviewing their route to market, their channel structure, and ensuring that their channel structure is fit for purpose or capable of capturing these new growth opportunities in Sub-Saharan Africa, and then consider some channel transitions. And we can also provide some guidance. We've written extensive reports on how companies can structure their channel and their route to market in the region to capitalize on the fastest growing markets. We also have some capability-based channel management expertise that we can provide. We always recommend that this is an ongoing process. However, once you've identified markets you want to go into and prioritize, you've overhauled your channel structure, we also recommend clients continue to monitor the markets that they're in and where new emerging opportunities are. This is our bread and butter. This is what we do day to day. We provide lots of data and analysis on an ongoing basis that can help clients stay ahead of the curve in terms of opportunities that are existing there. So in terms of today's webinar, this is really going to be our focus, market prioritization. We're going to help you understand where the new markets to focus on will be over the next year or so. So how do companies try to or attempt to identify new emerging opportunities in Sub-Saharan Africa? So it's quite a simple approach, really, we recommend. One is to focus on high growth markets and industries. That's the first step. The next thing to consider, however, is that you need to take a very tailored localized market approach. And this is because, as we all know, Sub-Saharan Africa is a massive region, 50 countries, significantly diverging cultures, languages, economic dynamics. And so you can't replicate the one model that works in a market like South Africa or Kenya in the rest of the region. So very much ensuring that you take a tailored localized market approach to ensure that you make the most of opportunities in those markets, and then ensure that you are staying ahead of what your competitors are doing in the market.